January 31st, 2020, Friday. Trading is going to be very easy today, guys. The market has created a very solid tunnel. Here's the numbers you should know for the day. 32.89 against 32.66, 32.48, and 32.33. If you focus on trading these levels, it's nice and easy, especially you got a day trading account. This is going to be a highly lucrative day, guys. Yesterday, we're officially getting a move 4 after a nice gap down. And a lot of people got confused with why, so we're briefly going to touch upon that in just a second. Now, the most important thing in this sequence, okay, is in the last 5 days, we're actually getting 3 gap downs in 3 days out of the last 5. So this is definitely telling us this is a definite shift in market behavior. So buy more puts today. Now, the only stock that we're actually interested in buying the dip is Amazon. We're focusing on certain levels. We're going to take actually trades on both sides of the equation on Amazon. Buying the dip, shorting the top. It's going to give us some really awesome opportunities today. Now, Tesla officially is out of juice, so short it now. Short Tesla at the open, guys. Historic timeline where the bullishness began during the SARS virus that we've pointed out on the video posted on January 26, guys. We're going to glance at that to actually give you an idea why the hell the market was moving high like crazy. Okay, we're going to review some trades today. Caterpillar, Amazon, okay, a couple other ones. Basically, the sector has been getting hit the most lately, guys, is the healthcare stocks. We're noticing a continuation in trend, lower and lower and lower. So short any healthcare stock on the bounce today. This Isle of Man trade was awesome yesterday. On the bounce, it goes straight to the moon at the market open, and then it drops, continuously drops throughout the day to the extent of about 20 bucks. Easy trade. And considering what healthcare stocks have been doing, this one is likely to go lower yet again today. So with that said, let's take a closer look at what we got going on. The reason the market was moving higher on bad news. Remember in the video that we posted on January 26th, here's the time frame, the timeline that I was referring to, okay? So the market basically kept dropping and dropping and dropping until, boom, this is actually on March 12th where we're getting the news where World Health Organization is saying, hey, things are really bad, and at this point, we're announcing this as a huge international threat. Instead of the market dropping, actually set a low that day, and it started rocketing to the moon. So when you saw institutions buying like crazy going into the end of the trading session, they were basing their decision off this historic playbook. Now, there's huge importance that I think the markets are totally mispricing right now, thinking, hey, we should use this playbook, while exact opposite should be used right now. Here's why. If you notice on this timeline, I've shown in that video, between this dot right here and this dot right here, there's about 60 days, guys. 60 days between when the SARS headlines have surfaced and between the time World Health Organization recognizes as a major international threat. Now, what's happening right now, the headlines on the current coronavirus has surfaced just 2 weeks ago. And within 2 weeks, we're going from here, to the point where World Health Organization announces a major international threat. So instead of 60-day time frame, we're only getting a 2-week time frame this time. So that is actually the part that is different. And therefore, this initial reaction yesterday will be reversed. As you see right here in the historic chart, there are a couple instances within the first couple of weeks while the market was dropping, where it bounced on certain days. But then look what happened the next day. It reversed. Bounced, reversed. That's exactly what we're going to get today. Bounce, reversal. So focus on that. So yesterday, instead of a move 3, we got a move 4. But the idea was the same. Huge gap down. We got that part of the equation right. We got the levels wrong. But we definitely did get the combination of 2 consistent gap down. So if you're a swing trader, you focus on buying puts, okay, right before market close and keeping them overnight, knowing that, hey, it's a gap down tomorrow. So if you missed this last two opportunities, guys, Monday is going to be another gap down. So if you don't have time to trade today, and there's one trade that you're going to place today, open up your trading account right about 3:45 p.m., buy some puts in the expectation of market creating another gap down Monday. This is how we expect market to trade today. We're tracking to open about 32.77. Okay, after that, expect a bounce to a level about 32.89, 32.90 at some point within the first half an hour. That's your ideal entry point on the put side. Then expect a gradual sell-off through the rest of the day. These things could coincide with a level of 32.66, 32.48. Ultimately, could drop all the way down to 32.33. So that's your exit points. They're broken down right here on the 1-day, 1-minute chart of S&P 500. So start right here, 32.89. As we hit the first target, collect profits, expect the bounce, short the bounce. Second level, we drop down to 32.48, 32.50 area, collect the profits, wait for the bounce, get back in. Third level, all the way here, it is a good possibility by the end of the day we could actually reach that level, which we're not so long ago at this level. In the last 24 hours, we're there. So 9 is still a move in a market direction shift despite of a move forward that we're getting yesterday. This continuation of behavior of gap downs is definitely different from what we've seen over the course of the last couple of months. So we are definitely expecting a move 3 to play out today. That definitely puts us right here before the drop off. So if we don't get a huge move yesterday, if we don't get a huge move today, which we can, all the way to 32.33. Monday we could be opening at 31.81. So tons of earnings. We can't review all of them, guys, but for the purpose of trading, Amazon is going to have some huge pricing. These options are going to price hugely on Amazon today, guys. So what you want to do is you want to wait probably towards the second half of the day. If you're working with a smaller account, you really want to trade Amazon the last couple of hours. That's when the options are actually going to depreciate a little bit, but the move towards the end of the day could still be substantial. Focus on trading this level because after hours, the action was huge. After hitting the high of 21.33, it actually dropped $113 to retest that level of 2020. So basically, don't expect Amazon to drop below the 2020 level. If it does drop right here at the open, you want to buy calls, not puts. Don't expect Amazon to lose all these gains. The quarter was just too damn good, and Amazon has been lagging other stocks. While Tesla is up, 200-300%, Amazon's basically been trading where it has been. So they're likely to collect profits on Tesla, use that money to buy Amazon stock today. So overall, Amazon is likely to go higher, not lower. But you do want to position yourself that, hey, if we get into this 21.33 level on Amazon and you see that it's hesitant to move higher, then definitely expect a pullback possibly to where it's currently trading pre-market at 2,077. So you can trade it on both sides of the equation as long as you observe these key levels. Caterpillar, all we want to do is buy 135 puts on Caterpillar the moment it hits 136, 136.50 right here, expecting further drop in Caterpillar today. Tesla, we want to buy Tesla puts. Tesla puts have been highly expensive in the last couple of days, but today they are going to be cheap. This is your moment to actually short the hell out of Tesla. Expect a possible visit of 620 for sure. 620 is the first support level on Tesla. It could unwind to 610 and all the way 587 as the profit takers are going to be coming in today. ILMN, guys, anytime the stock pops, you just want to buy some puts. 295, 290 puts on ILMN. Yesterday, officially was a move 4. This is how it looks on the chart. Multiple times the market tries to break lower. All of a sudden, we get the news that coincides with the historic playbook in 2003. The market rockets higher. They're missing the time frame, though. You're calculating that we're at that point of the 60-day time frame, but we're really in a 2-week time frame as far as the current coronavirus. 2-day sequence 9-4. Basically, as you can see on this chart easily, this is where the market begins to sell off recently. It's hitting that level. It's unable to break above that. So those those areas right here is gonna act as a resistance level. So focus on shorting stuff when it gets there. 23794 is the 5-day sequence. This is how it looks on the chart, guys. Basically, this gap area right here, 3290. Anytime we get here, that creates a good entry because this is where the tunnel is right now. The tunnel is between 3290, 3233. Basically, anytime we get close to 3290, you want to short. Anytime we get close to 3233, you want to collect profits. The move for today we're expecting is a move 3 or a move 11 or a combination of both behaviors intraday. VIX is officially back above 16 after dropping to 15.3. VIX looks rather strong, so we do want to stay focused on continuously buying puts on stocks when market bounces, with an exception of Amazon. Today, play Amazon on both sides. Guys, let's roll. I'll catch you on the next trade soon.